Every investor swears that their way is the best way, but the truth is, in 2025, the best strategy is the one that matches your goals, your risk, and this market's reality. Today, I'm breaking down the most popular strategies, showing you which ones thrive in this type of environment and which ones to avoid, and also how to pick the one that will actually work for you. Welcome to the only channel that flips a script on real estate, money, and mindset. I'm Rob Ragno, and I created Redefine You to give you real, raw strategies that we're using right now to win in real estate. No theory, no fluff. And if you want to make the right moves right now, just subscribe to this channel and grab the free school community link in the description below. Inside, we're doing live deal reviews, networking, and showing you exactly how to structure deals that pay you from day one. Now, here's the problem. Too many investors pick a strategy because it sounds good on Instagram, not because it fits the market or their personal situation. They watch a flipping show, buy a distressed house, and end up losing money because material cost spikes or days on market double. Or they jump into short-term rentals without checking local regulations and find out 6 months later that the city banned them. In 2025, interest rates, insurance hikes, and stricter zoning laws are exposing bad strategies super fast. And the best investors aren't chasing trends. They're matching to the right strategy to the right market conditions and their own financial blueprint. So let's break down the 5 main strategies on how they perform in 2025. Buy and hold. This is the classic long-term wealth play. Steady cash flow, tax advantages, and equity growth. In 2025, it's strongest in B-class neighborhoods within landlord-friendly states, especially markets growing in population and job bases. The challenge? High interest rates make the cash flow margins tighter. So buying under market value and locking in creative financing is critical. Think of this as a foundation strategy. It's not flashy, it's not sexy, but it's reliable. Fix and flip. Higher risk, faster payoff. Great if you have a trusted contractor and network and can buy significantly under market value. In 2025, the reality is holding costs can eat up your profit on days on market stretch, so focus on affordable price points in areas with proven sales velocity. Avoid luxury flips unless you're highly experienced, because today they're sitting longer and carrying higher costs. The BRRR Method. Buy, rehab, rent, refinance, and repeat. This blends the buy and hold with the forced appreciation from renovations. Still powerful in 2025 if you can control the rehab costs and refinance into favorable terms. The risk here is in the refi step. If that rate climbs, your cash out may be smaller than expected, so run conservative numbers. Short-term and midterm rentals. Short-term rentals are facing more regulations and unpredictable occupancy in some markets, but midterm rentals, think 30 to 90 day stays for traveling nurses, business relocations, or project managers. These are gaining huge traction. They are less regulated, often have higher nightly rates than long-term rentals, and can fill a gap in markets with hospitals or corporate demand. Syndications and REITs. These are more passive plays. This is where you pool your capital with other investors or buy shares in a real estate investment trust. In 2025, syndications in multifamily or industrial spaces are still attractive if ran by experienced operators, but do your due diligence. REITs are liquid and diversified, but won't give you the control or tax benefits or direct ownership. So which one is best? Here's how you decide. Start with your goal. If you want consistent cash flow and control, buy and hold or midterm rentals might be your move. If you're looking to build capital fast, flipping or BRRR could work if you can handle the project management. If you have limited time and want passive exposure, a syndication or REIT may make sense. Then match your goal to your market. A strategy that kills it in Tampa, Florida may flop in Chicago, Illinois. Look at population growth, job growth, median income, and landlord laws. Finally, match it to your resources, your time, your capital, and your network. The best strategy is the one you can execute repeatedly without burning out or overextending yourself. In our community, we had 2 new investors start this year. One was a full-time nurse with limited time but solid credit. She went with a midterm rental near a major hospital, using seller financing to keep her monthly payment low. She's now cash flowing $1,200 a month with almost no turnover headaches. The other was a contractor who wanted faster returns. So he took on a cosmetic flip in a high demand suburban market. 6 weeks later, he sold and cleared $38K in profit. Two totally different strategies, both chosen because they fit the investor's goals, market, and their skill set. So if you want my help selecting your strategy, a full breakdown of which strategies work in which markets, meet me inside my free school community. The link's in the description, and inside you'll see real deals, real numbers, and real people applying the right strategies to win in this market. Like this video, subscribe, and remember, real estate pays you when you stop chasing trends and start matching the right strategy to the right plan. Why are you still here? Hurry up and join the school community so we can start working together.